Randy, thanks so much for being with us here in Denver. A lot of investors are quickly moving into ETFs as they become more familiar with the ETF space, especially with the GLD, the SLV. They're very familiar with them. Are you suffering because of these ETFs?
I love this question. Why do you go into an ETF? You want to minimize the risk. And I can understand in the traditional mining investment space, ETFs are a source of refuge. You know what you've got, there's no surprises. The mining industry has had a poor record recently of delivering margins, delivering profits, and everyone expected gold prices climb up, margins would expand greatly. It doesn't really work that way in the mining industry. There's always sort of a design margin that a mining company works on, and commodity sort of just all that does is expand or contract the ore zone boundaries. If they look at our company, we have fixed costs. We don't have those cost risks. So the only exposure that you have in our company is the commodity price, really, and then the production profile, which we've got a very good track record of meeting or exceeding our production forecasts. We haven't had any misses in the company. So versus Silver Wheaton versus an ETF, we deliver leverage. We do have a base cost, and so we will outperform relative to the price of silver as silver goes or gold goes. We deliver organic growth. We get a percentage of these mines no matter what happens, and so we continue to add. There's absolutely no growth in an ETF. We get accretive acquisition growth. We reinvest a lot of our capital back into the ground and buy assets that add value. And we provide yield. We have a dividend payment that we pay out, 20% of our cash flow. So we do all of that. There's 28 people in our company total. Our G&A expenses are actually less than what the ETF and the bullion banks charge to hold the gold, and we deliver leverage, growth, accretive growth, acquisition growth, and yield, and we do it for less than what the ETFs charge. So I never understand, I can understand the reasoning why you go to an ETF, but I think people that go into ETFs should really consider streaming model and understand that the cost risk is taken out of your mining investment decision in the streaming model itself. So,
how are you at Silver Wheaton navigating, this kind of difficult, choppy market and finding growth for investors?
Well, it's along with those drops in silver and gold prices, equities have actually been suffering even more. And so Silver Wheaton, we provide a source of financing. We compete against debt and equity in terms of projects moving forward. The mining industry always needs capital, always will need capital. Three main sources of capital, or two traditional sources, which is debt and equity. But the streaming model has really come to the forefront. It's become a bit more mainstream, no pun intended.
Sure. So there's talk of a lot more private equity firms coming into this space, wanting to provide finance to junior miners, microcap exploration companies. Do you see them as big competitors on the horizon?
We have the advantage of some critical mass, and I would also argue we've got a good, strong technical team, a good foundation, a good, strong reputation, and so we do have a head start. However, you have to recognize anytime you have success, there's going to be people that want to copy that success and go forward. And so we have seen streaming. When we started streaming back in 2004, we were the first company that came out with streaming concept. There's a number of companies that are now using streams to help finance and work forward.
So let's focus more on competitors in the space that aren't private equity. You have Royal Gold and you have Franco-Nevada. What separates you from those two competitors to attract investors to your company as opposed to theirs?
What separates? They are gold focused. I like to say we're and I think all companies, we're profit focused, but we do see more opportunities in the silver space. And we are a little bit more bullish on silver prices than we are on gold prices, so we do tend to stay more focused on the silver side, but we're not scared to step into the gold space. It is a precious metal for the same reasons, a lot of the same reasons we like silver, we also like gold. And so both Franco and Royal are more gold focused, and they're a little bit more diversified. Franco especially, I think they've got a pretty substantial portion of their revenue actually comes from oil and gas and the energy side. And so they're a little bit more diversified. We are 100% precious metals focused. And then the other thing that sort of differentiates us is that we've got a bit more size. We're equal to both of them put together in terms of market cap. It gives us a bit more capacity in terms of being able to do deals like the Vale transaction at $1.9 billion and finance that without issuing a single share going forward. That would have been a stretch for a lot of the other companies in the space.
All right.
Very, very important.
Well, Randy, thanks so much for being with us here.